We've been hearing a lot about intervention on currencies, especially with the Bank of Japan lately. Our guest today is Rob Booker, here to talk about how to trade those opportunities. Rob, thanks for being here.
Hi, Tim.
Well, does intervention offer a trading opportunity in the currencies?
Some people think that intervention is an automatic cancellation of whatever trading strategy they're using. They need to stay out completely until the Bank of Japan's done with their program of intervening in the currency markets. And I don't necessarily agree. I think that the Bank of Japan has fairly clearly stated some of the levels they're trying to protect in the dollar-yen, and it makes for the possibility of using that information that they've publicly released to try to capture some of that move.
And what about quantitative easing on the US dollar side?
Quantitative easing is really the process that the Fed uses to sort of inject capital into the US economy, and it's really sort of a separate discussion. The quantitative easing that we've been hearing about really hasn't begun yet. They really haven't done much more than just keep their balance sheet exactly the same. So the Bank of Japan right now is probably the primary intervention opportunity, and the Swiss National Bank makes its intentions fairly clear. And so that's another currency that can be used sort of in this type of strategy. If
you are going to trade this, is then the idea not to hold it over a long period of time? It may bring down the time frame of your holding periods?
If I were going to exclusively dedicate some of my time to trade, for instance, the dollar-yen, and I was going to use an intervention strategy, I'd be watching for the following levels. 85, which is a level that they've said in the past they were going to protect. 82, which they've said is kind of a new floor currently. But if someone's watching this right now and the dollar yen's already below 80, there are levels like 80 exact, or 79, 77, and then 75. And those are all levels at which a trader could take a very, very small initial position with a very small stop loss, something on the order of 20 or 30 points with a substantial 100 to 150 pip profit target. And of course, the risk of loss is always substantial in Forex. But if you did something like that, you'd be sort of preparing yourself to perhaps take advantage of what the Bank of Japan has publicly said that they want to do, and then stop out quickly if it doesn't work out, but then go for a wild ride on the positive side if it does.
Rob, thanks for your time.
Thanks, Tim.